Hi there. Thanks for tuning in again. This is episode 2 of the Nameless Real Estate Podcast, and it's going to be the first one that I've done an interview on. My first interview was with Jim Hostler with HighTechLending. We're going to discuss a HECM loan, which is a loan that you can use when you're getting ready or into retirement to get the equity out of your house in a time period where you can actually use it to your benefit. We're also going to discuss a little bit about where he comes from, his background, his history. We ramble off quite a bit, just like I am now, because that's what we do, and that's what I do. Afterwards, we're going to come back to here, and we're going to have I'm going to run the numbers again like I did last week, and we're going to discuss a little bit about local and national real estate news. There's one thing I wanted to point out before this interview, is that at one point I mentioned to him that through my brokerage, ProStar Realty, we deal with a lot of HUD properties. And the last couple of HUD properties we've had were both reverse mortgages. And I mentioned the word foreclosure several times. I don't want you thinking that these houses were foreclosed on because it was a second mortgage. In both cases, what actually happened is the first house, there was no heirs. After the man died, he did not have anybody to leave the house to. And so the bank took the house afterwards to make up the difference in what they were owed. In the second case, the family actually spent so long arguing about who was going to get what, the house got foreclosed on. In a HECM loan, in a reverse mortgage loan, after a person leaves for up to 1 year, they have the right to pay the loan off. If, unfortunately, you die in the house and your heirs are dealing with the situation, they can sell the house and pocket the proceeds, the equity that's left on the property. They can pay off the existing loan, and it is not something that's going to necessarily wind up in foreclosure. I wanted to clearly call that out because when I was reviewing it, I realized that doesn't sound good. So if you have any questions on this, right, it's Jim Hostler. He's at HighTechLending. His website is going to be down in the show notes. All right. Hope you enjoy the interview. Hey, Jim. Hi. You can hear me fine, right?
Yes. Hi, Ray.
Hi. So thanks for coming on, and thanks for helping work with the technology to get this all up and going. So
yeah, thanks for having me.
Hey, no problem.
It's always good to connect.
So it sounds like you're having a busy day.
Extremely busy time.
So
grateful to be helping a lot of senior homeowners right now.
That's great. Yeah. So you right now are with HighTechLending, correct?
Yes. All right. Branch manager in Phoenix with HighTechLending.
That's right. You moved down from Sedona.
Yeah.
So, and how long ago was that?
Almost a year ago.
Oh, it's a good time to move down here. So
yes.
Yeah, it's right. Really getting crazy out there on the buyer side. So you probably squeaked in at the last second before things got weird.
We got it under contract, and then we moved right when April 15th, when everybody was wigging out on the pandemic, and it's like, oh my God, can we have movers? We're going to all die. And, you know, it's a little intense at that time, but we got through it. All good.
All good. So let's introduce you to the audience and whatnot. Tell me a little bit about yourself. I know you're from Chicago at some point.
Originally from Iowa.
From Iowa. Where about?
Tipton, Iowa. Over by, if anybody's a Hawkeye fan, University of Iowa, about a half hour from there.
Okay.
Little town, East Central Iowa. And when I was 30, I moved to Chicago, which is where I got introduced into the mortgage profession. And I've been in the mortgage profession basically 30 years almost.
Wow.
And then we moved to Arizona, Sedona 12 years ago, and to Phoenix about a year ago.
Outstanding.
And yeah, HighTechLending, I started with them December of 19. 4 days later, I had a conversation then to become a branch manager and open up a branch now in Phoenix, but it serves Phoenix, California, Colorado, and Illinois.
Had to sneak Illinois in there, didn't you?
Absolutely. My kids and family are back there, so it's like I just needed an excuse, you know?
That makes a lot of sense. My grandparents used to live in Davenport, and my dad's from Rock Island in that area. So,
oh my God, the Quad Cities. So yeah,
yeah,
like less than an hour from where I grew up.
Yeah, I used to. Hell, with ages and everything like that, you guys might have been rival football teams or something. But Yeah, and we used to go back to the Quad Cities like every summer. We drive across the country, and you have not lived until you've done the station wagon trip across Nebraska, and
Like
I
nothing there.
nothing there. You get out there, and the humidity would just kill me. Just absolutely. When you're that close to the Mississippi, it's just like, why am I chewing the air? What's going on with this? So,
Which is higher, the humidity or the temperature, right?
yeah, so I'm happy to be in the desert. But so you get into lending in Chicago, and you come out here to Phoenix, and now you've moved into the reverse mortgage side of the house. And I actually found our old notes. The notes I took from that meeting we had was that about 2 years ago. I know it was pre-COVID. We met up at the resort. There's that big presentation. You invited me to it.
The Bob Massey.
Was that
We
what?
had that at the Orange Tree Resort.
Yeah. So I was just reviewing all these notes and stuff like that. But I think it'd be better if you just told me how the program works, and both for people who want to stay in their place and the people who want to use that for purchase.
There's honestly, thanks for asking, Ray. There has never been a better time. Um, Reverse mortgages, I really got interested in them 5 years ago. 2013, HUD, who's Housing and Urban Development's basically the godfather that writes the rules, right? And they looked at our meltdown in 8 and 10 and said, there's got to be something different. They've got to change them for sustainability. And seniors are a protected class to help them out. And they started making changes. And I have tried my damnedest to punch a hole in them, and I can't. The biggest hole there is ignorance and people just not knowing how well they've changed or how much they've changed. So and there's never been a better time because there's three factors. It's not, you wake up and you and your wife want to buy a home. It's like, well, I've got 10% or 20% down, right? With a reverse mortgage, it's what's the age of the youngest borrower. And one of them has to be if it's a couple, one has to be 62. The other one can be not 62, but the age of the youngest borrower, value of the home, and the prevailing interest rate determines technically how much equity they're going to give you, aka loan amount. Okay. Now, from there, what do you want to do? If you want to utilize that, which became, in the beginning, it wasn't so, but in 2009, you can now purchase a home. Well, that leads to many options. Because as you get older, I've got one couple now in their mid and late 80s that they have a 2-story home. They don't necessarily want to downsize, but they want to flatten out their living space. Well, what happens if they sell a $600,000 home and buy a $600,000 home, but do it with like a 35% down payment, and the rest is in a reverse mortgage? So it's just kind of a lateral move as far as value. Speaking from Iowa, if we sold a $200,000 house in Iowa, that's a nice home. And we come to Phoenix and think, we're going to buy a nice home in Phoenix? Well, probably not. And so again, depending upon your age, you can upsize. And that's especially great example if you're going to look at new homes, because I know that market's getting bigger and bigger, right? But you go there and it's like, well, my checkbook says I can only afford entry level. If you utilize a reverse mortgage, well, maybe now you can buy the bigger model, or you can get the upgrades, or you can, make the home more of what you want instead of having to settle for something less. If you want to downsize, that's instead of taking you take a $600,000 house and you buy 250, and instead of taking 250 and buying it, what about just taking, I don't know, sake of example, maybe 150,000 and use that for the down payment and keep additional cash, because cash is king in retirement.
Right. So in a situation like that, they've sold, they're buying a 250 house. They obviously have cash because they just sold what they got out of, but they don't want to throw it all into the house.
Right.
So they put 150 down. They're borrowing 100,000.
And
right.
Again, it's simplicity in examples, what we're using the numbers for, because based on age and so forth. But yeah.
And speaking of it, it's so much easier if I use round numbers because I can't do the math in my head as fast as I used to. So, so we got $100,000 loan sitting on the house. They don't have to make a payment on that. correct?
principal and interest payment.
No principal and interest. It sits there on the property as a lien until the last person leaves the house, whether moves in with the kids, goes to a retirement home, however that last person, which is why you follow the, you do it off the youngest person.
Yes.
All right. So we have a lady, she's 60 years old. She gets herself a 45-year-old boyfriend. All right. They get married.
But
yeah, spouse. They get married. All right.
Yeah.
So she's 60 when she hits, I believe the date was 62 is when this comes into play.
Yeah.
All right. He's going to be 42 at that point. Are you still able to do that scenario right there? Or
Absolutely.
Okay. You're just running it off the 42 and whatever the interest rate is.
A lot lower.
Right.
But yes.
So, okay.
And one of the big myths and misconceptions I keep hearing people talk about, it's like, oh my God, you're not going to own your home. Yes, you do. It's just exactly like you have a traditional regular mortgage. It is a first lien against the property. That's it.
And the amount doesn't come due plus whatever interest has occurred during that time period until the last person, the last spouse leaves the house.
Yep. And there is no end date because we're so used to getting a 30-year mortgage. If you're 62 years old and get it, you want to live to be 120. God bless, go for it. There is no end date.
The lady who lived kitty corner from my house sold her house to the guy across the way from her, who's been playing Monopoly on my street. I mean, he just every time he sees a house come up for sale on the street, he goes and buys it. And she sold it to him on one. Okay, this is embarrassing because this is one of those terms you have to learn to take the test and to pass the test to be a real estate agent, but you'll never use it again for the rest of your life. So you forget it 3 seconds after you walk out the door. Yeah. He gave her a life lease on that property. She sold it to him. All right. He gave her a lease to live on that property for as long as she was alive. She was 85 years old at the time. He thought that was a pretty good deal. 12 years later, she won. Right. She was in that place for a very, very long time, well past that date. So, and I think that's something we're going to be seeing, here in the future is people are living longer. People are being healthier. They're taking better care of themselves. The retirement age of 65, God bless you. What are you going to do for the next 30 years?
Right.
And how are you going to make sure that your retirement age you planned out? I mean, you planned at, 20 years. What did they used to say? You retire at 65 and actuary tables said you should plan out to like 83 or something like that. A little bit younger for men.
When it began, it was like you were dead in 2 years. That's why Social Security was so fast.
That's what Social Security was for. Yeah.
Yeah. But now I don't know exactly what it is, but Ray, you bring up an excellent point. I read an article not that long ago. 91% of Americans want to age in place and then just, die in their home. And you think about that, and then you think about how many people are going into, back in Iowa, we call it nursing homes. We call it assisted living here, right? But that's 24/7, 365 care. And a lot of times, most of the time, when a person enters in assisted living, they don't need 24/7 care, but they're paying for it. If a person can utilize a reverse mortgage and take the proceeds from their home and pay for in-home health care, it's a lot less expensive.
You do have a point there. And they're surrounded by the gentleman friend of mine. I love telling stories. He was diagnosed with Parkinson's and doing okay, but he got hospitalized because of a car accident, and not because of the car accident, but because the sudden removal from his normal routine really, really sped up his illness. And, we're in real estate. We know moving is traumatic.
Oh yeah.
All right. Try to think about moving. I was talking to a guy yesterday, called me up on a listing, and he's been in his place in downtown Phoenix since 65.
Oh my gosh.
Yeah, he's been in there since 65, bought it with his wife. Wife passed away a couple of years ago. He was actually calling me about his daughter because he wants his daughter to move down closer and whatnot. But it's like, he told me he bought that place for 18,000. Right, that neighborhood goes for 500 right now. Right, and
Wow.
did not, yeah, and he wants to stay there. That is the house that he's known for literally more than the last 50 years. I mean,
Yeah.
55, 56 years. All right, he can probably walk that through that house with the lights out
Mm-hmm.
and not hit anything.
Right.
And
It's
so,
just innately him.
mhm. But
Yeah.
and we were talking his daughter and stuff like that. But in like his scenario, he's obviously got a lot of equity in there. If he's been in there for over 50, he's got to be probably at least 70. Figuring if he bought it when he was 20,
Oh my gosh. Yeah. At
you
least
know.
that was the
So,
first home. Yeah.
mhm.
And wow, you don't see that very often at all.
That's one of the reasons why I like my neighborhood down here is that people get in here and it becomes home. It
Yeah.
really does. And the neighbors come and go and stuff like that. And, next thing you know, a building gets torn down and a bunch of, you remember my old location up on 12th in Missouri.
Mm-hmm.
Yeah, they bulldozed that old office building down and put in townhomes.
Yeah.
So there's always change going on down here, but people move down here and they stay here. And, at a certain point, you're done making a mortgage payment. How do you start unchecking? Now, I think part of the pushback that you're getting on this thing is because I remember when my grandfather back in like the 80s or so he started mortgaging the house and stuff like that because he was trying to do stuff with the money and whatnot. And one day he started going towards a reverse mortgage back then. And I think that's when
Wow.
my grandmother shut him down. My grandmother was honestly saying that it's like, I'm going to outlast you. All right. I don't want you putting a reverse mortgage on this house. And then all of a sudden I'm out on the street. If and I've heard some horror stories back then, but once they redid the rules back in 2009, they sounds like they took all of that experience to heart and said, okay, how do we build a product that does not allow that to happen ever again?
Yeah. And if you think about it, in 2011, MetLife, Wells Fargo, and I forgot the third one, the three big players of reverse mortgages, they're out of it. That in the very beginning, if you sold your home and had a profit, you had to give, I believe, half the profit to the bank. That no longer exists.
Mm-hmm.
It's regulated by HUD,
Mm-hmm.
and so they're the godfather that writes the rules. You really could call it a retirement loan because FHA insures it.
Mm-hmm.
And so it's like, take out the reverse mortgage, live there forever. You take the equity out, it's tax-free income. Check with your CPA. I'm not the tax guy.
I'm
But
going
what do
to
you want
bring
to
up a
do?
big asterisk I'll hold up. It's like, okay, we're not
Yeah,
tax guys. We're not attorneys.
right.
This is a lender and a real estate agent here,
That's right. But what do you want to do
Mhm.
with the money? One of my colleagues a few years ago had a client in California pulled out $200,000, and when the check hit the bank, they had a $200,000 motor coach they picked up, and they headed off and saw the U.S.
Mhm.
So the limitation of what you can do is in your imagination. It's pretty cool in that respect. But most people pay off an existing first mortgage with it.
Mhm.
If there's money left over, they get cash. But if you're paying off, my God, I'm reminded of a couple that he had a $1,200 Social Security check, and their mortgage payment was like $43 short of that. So his entire check went to just pay the mortgage.
Mhm.
Her Social Security check was just under $600. That's what they lived on. So I did a reverse mortgage, paid off that mortgage. So now they got an increase. They still have to pay taxes, insurance, but it's fair to say they had almost like $950 increase in their monthly income because they don't have to pay principal and interest. And I put 20 some $1,000 in their savings account. I mean,
Mhm.
that's like winning a micro lottery for them.
Mhm.
So it makes a big difference in people's lives. I have a lady that just closed, the 3rd of this month. And I took her there. It was a couple, met with them back before Thanksgiving. And he was fighting cancer, but not, had cancer, treatment. Between Christmas and New Year's, he died.
Mm.
So now it's like no mortgage payment, and she got just shy of a $20,000 check.
Mm-hmm.
And she had bills from him and so forth, and made a big difference in her life, you know? So there's many happy things. And that selfishly, what I want to stress to people is if you're going to look at a reverse mortgage, make sure you do it with someone that's an expert in the field, and that's basically all they do, because I have an extremely strong bias. They're their own profession. They're not like any other mortgage product that exists. So if you
Mm-hmm.
don't know it and it works counterintuitive to a traditional mortgage in many ways, doing it by somebody that does one every 2 years or something like that could actually not be in a person's best interest. It could get set up wrong and cost them tens of thousands of dollars.
Is there like a national registry or a national organization or anything like that for
There's
professionals who
NARMLA,
specialize?
which is a National Reverse Mortgage Lenders Association.
Mm-hmm.
HighTechLending is a member of that. Um,
This doesn't sound like a product you run down to Wells Fargo and pick up.
no, in fact,
Okay.
no bank and no credit union is doing them.
All right.
If they are, then they're brokering it to HighTechLending is a big broker also, so they would be
Mm-hmm.
brokering it to us. But banks don't do them anymore. Credit unions don't do them anymore. Nobody that I'm aware of, no bank or credit union in the United States does them that I'm aware of.
Okay. Now, I remember something about an annuity. So instead of getting a lump sum at a certain point, let's say you got let's take Jack, guy who called me up yesterday, right? If he's got that house paid off, he's never taken a mortgage out on it. He's sitting on $500,000 worth of equity. Or I remember something about like an annuity. Instead of getting a lump sum, he could be getting like a payment. Is that
Except
still in effect?
I have to split hairs because back, when MetLife was doing them, Wells Fargo,
Uh
they were
huh.
like, "Oh, I'll get you a reverse mortgage and I'll get you an annuity." So now there's paperwork that says you're not getting an annuity. You're not doing financial services, right?
Mm-hmm.
Because unscrupulous people did wrong by a lot of people in that space. So
Right.
it's not an annuity, but there's actually 5 ways to get cash. So you can get a lump sum, you can get a tenure, which is income for life, and you can get a term, which a pinnacle of that, right? Say, I'm 62, I want to retire. I don't want to take my Social Security until I'm 70, so I'm going to get my reverse mortgage. I'm going to take a monthly payment until I'm 70, and then I'm going to let it stop. And then the remainder would just be a line of credit I could tap into. And then you can do, modified term, modified tenure. If you want to, I don't know, get a little bit of money out, you want to pay off some debts, and you want to establish a little bit of a line of credit, and you want a monthly income, you can do, if you, like gentleman you're talking about's got enough equity, it could be set up and structured that way. That would work. So the beautiful aspect about it is,
Mm-hmm.
it's like when I sit down and talk to a homeowner, what are their needs and goals? And then how can this reverse mortgage be structured to fulfill their needs and goals? And then how can we have a conversation to ensure that they understand it? Because I hate surprises.
Yeah, they don't have good surprises anymore. They used to be fun. Now they're not.
No, right?
Um, so how many? This sounds like something that you really need to talk to your financial advisor about. How many financial advisors out there are aware of this change to the program?
Not enough.
Okay.
And it runs the gamut. I get business as a strategic partner from financial advisors, and I'm grateful that they're on board. And there's other
Mm-hmm.
ones won't even talk about it, and I think I'm going to say it, it's bold. It's like, I think that's infringing on their fiduciary responsibility. I think they have a fiduciary responsibility to know. So,
And of course, if they're watching this, they could give you a call and you'd talk their ear off about it.
absolutely. And by
All
the
right.
way, I have a new website
You do.
that people, yeah, myretirementloan.com. And I have videos on there. So I wrote the book. If anybody watching our segment here wants to contact me, I'll offer a complimentary book. If they're more into the videos, go to my website, and I've got about 20 videos up there, little short videos. I kind of took the book and blew it apart
Mm-hmm.
so they can take a look at that. So yeah,
All right,
lots
I
of
will
ways to
put that
go.
down in the show notes below once this is
Thank you.
posted up, and everybody can click on that. Go to your website. There was one more question I want to ask you, and then I want to get over into divorce.
Okay.
All right, and okay,
Yeah, because
so we have the family farm. The family farm has a reverse mortgage and a first lien on it. Mom decides to move to Florida, get off the family farm, but the kids still want it. All right. How do they retain possession of the house with the loan, with the reverse mortgage on there? If you could
well,
explain
we
that.
can't do agriculture, so we can't do the farm, but we can do the home.
Oh, we'll do the home. Yeah.
Okay. Would it be that as long as, well, there's not a clear answer, because if mom goes to Florida 5 months and 29 days, this is still her primary home. It's okay. If she wants to permanently move down there, then basically she has up to a year in which to pay off that reverse mortgage, whether it's cash, a new loan, sell the house.
And if she wants to, if the kids want the house, she could sell the house to the kids for
Sure.
enough to pay off that loan, and then the kids could take a loan out on it to
Yeah.
pay for.
Could be a
All right.
gift of equity. Yeah. Well, that's the other thing too. Let's take it the other way. This is not a market, hasn't been for what, 10, 12 years. But if there's a correction and it ends up that a person owes more money on their home than it's worth at some point in the future, and they die, the heirs can purchase the home for 95% of the appraised value at that time. And if the loan amount exceeds that, that FHA insurance covers that deficit.
Really?
Mm-hmm.
I think you remember that ProStar is a listing broker for HUD, Housing and Urban
Yeah.
Development, and we used to get a lot of listings from HUD. And over the last 2 years or so, we saw these, what's basically a foreclosure at that point, houses coming through, and after talking with the neighbors and whatnot, realizing that these aren't people who lost their home because of foreclosure. These were people who had a reverse mortgage that for some reason the bank decided to exercise the FHA insurance on it.
A lot of times, well, when
And
you sign closing documents on a reverse mortgage, and this is why I also work with the title company, escrow company that specializes in them, there's two mortgages there. The second one is the foreclosure. Because think about it, a lot of times people die, they go into assisted living and they don't have the faculties anymore to be financially prudent to run their own affairs. So if it escalates into, the home's not being taken care of, or they move out and HUD has to foreclose, then those documents are already on file for that to occur. And that's made aware, people are made aware of that through when when we sit down and talk about it. That's how it works.
I would encourage you to make sure that the homeowner has found a person in their family, maybe a professional that they can work with, somebody who can really take charge of them if they're having issues like that and they're no longer able to take care of themselves, take care of the home. And, it's like, well, you didn't respond to any of our letters. That's because you weren't sending it to, the care facility. And
Right?
the bank doesn't know that. And I don't think the banks are going to go way out of the way to try to track somebody down. So,
well, they send a letter once they check their regulatory. They're supposed to check. HUD's supposed to check once a year to make sure it's still your primary residence and you're alive. If they don't after a while, then.
Well, I'm not just talking this program. I'm talking any program out there. It's like, mom goes in the hospital. Everybody's worked up about mom being in the hospital. Who's making sure mom's finances are being taken care of? Who's making sure that the payments are, who's making sure, we don't have to worry about the bank, but you do have to worry about taxes. And you do have to worry about that insurance policy. Somebody needs to, and the family needs to step up, or somebody, and I'm becoming more and more a big fan of family trusts or anything else for people to, you get hit by a car tomorrow, you're in a coma, who's stepping up to take care of your financial side of your life? while you get better.
2019, I lost both of my parents, and
I'm sorry to hear
I
that.
had to go through that. Thank you. And it was,
Mm-hmm.
it's a situation where it's highly personal.
Mm-hmm.
No two are alike. But the bottom line is, to your point, it is certainly much better to be responsive and figure it out now than be in the middle of that stress and have to react. I would not wish that on anybody. And thank God I didn't have to,
Mm-hmm.
you know, to that point. Things are taken care of. We knew what was going to go on as far as finances and all of that. So that, thank God, was okay. But boy, the people that don't, and then you have to wake up in the middle of this losing a person or watching them be, know it's end of lifetime, however long
Mm-hmm.
that lasts, and have to deal with everything else, and you're just thrown into it and have to emotionally react and not have any bearings on the foundation of what's going on. Would not wish that on anybody.
Yeah.
So yeah, good
Well,
advice.
now that this conversation's taken a depressing turn, let's take it even farther because we only got a few minutes left. And
Down the rabbit hole. Yeah.
yeah, let's keep going. Doom, death, and despair here. We both got a designation as a divorce specialist in real estate, and I can't remember exactly what the certification is. I should have done that in my homework beforehand. And we both learned an awful lot about divorce and how it affects real estate. And I don't think either one of us ever really did anything with that.
No,
Probably
right.
should have, like all the other great ideas I've ever had. Buying Bitcoin in 2013, when I was looking at it, going, yeah, I can see throwing $100 into that. If somebody is getting a divorce, whether or not their spouse knows it or not, what's from a lender standpoint, what do you think they need to be looking at to make sure that they can be, if they want to keep the house, make sure that the house can be done, that they can handle the entire payment themselves, or if they don't want to keep the house and the other spouse, the staying spouse, wants to keep it, how can you help them get the help in a position where they don't have to worry about any of that mix up?
Well, think about it, Ray. It's like reverse mortgages, HECMs, home equity conversion mortgage, do not have the same underwriting guidelines that a forward does, and they're not credit score driven. So what happens if you have a spouse that hasn't worked for her whole life? That's a tradition, that many people have. So there's so many variables there to be able to protect the home, to be able to maybe get cash out and pay off a spouse, to maybe get cash just to live on, to get cash if one spouse takes and buys out the other one and they get a lump sum, maybe buy a smaller home with that lump sum and keep a lot of the cash, because that might be all they get. They get a lump sum and you're done. Well, instead of taking all of that and putting it into the house, you still have to worry about an income. Take some of that money, put it in a house, utilize a reverse mortgage to buy a house. So it's critical, I think, for us to collaborate in the space of a divorce as a professional realtor, as a professional lender that specializes in reverse mortgages, as whether it's an attorney, there's mediators, there's people that specialize in that. I think that space of divorce is one of those times where it's really beneficial to collaborate with other professionals and kind of do a 360-degree perspective on what's best for them and how that works. So, yeah.
Yeah, I think that class, I remember that class. That class was scary. There was so many ways that they expressed in there how people say, okay, fine, you get the house, I'm out of here, boom. And then nobody ever really takes that next step and goes, what does that really entail? She's keeping the house, he's leaving, he doesn't want to be on the loan because he wants to buy his own place a year later. And the staying spouse does not qualify for a loan, by themselves with their income. How do they refinance out? And
too many people in the senior market, and keep
especially
in mind,
and that's the big growth in that's a big growth space in divorces right now, is the silver divorce market.
That's the largest as a percentage. That's the largest demographic.
Yeah.
Yeah.
And
And think
what is
about,
it? You just go through and it's like, okay, I'm unhappy, but wait until the kids are gone. I'm unhappy. Wait until we get a new house. I'm not going to be happy until that 195-pound, breathing oxygen on my couch is no longer on my couch or whatever
yeah,
it is.
I don't know what the breaking point is. I know somebody recently was married over 30 years, woke up and said, I'm gone. You know,
Yeah.
I know it doesn't happen overnight, but it's like, why? I don't get it
I
sometimes.
once upon a time, when I first moved down here, I was staying in one of the apartments on Central, and each apartment had storage units that were separate from the store. They were like off in its own building. And I was over there moving stuff in and out of the storage unit, and this guy pulls up in a truck, and older guy, easily. When I used to tell the story, I say, "Oh, he's easily in his 50s." Now that I'm in my 50s, I realize the guy was older than that. And it's like, okay, so easily in his 60s or so, and this woman, about the same age, and this very elderly lady who, she easily 80s, maybe 90s. They're all moving stuff in to this apartment. And the gentleman comes out and he opens up the back of his truck and he's getting some tools out. And he's like standing right next to me as I'm moving my stuff out. And he just turns out of the blue, goes, "I've been married to her for 30 years. 2 weeks ago, she said she's leaving me. She wants her own place. So I'm moving her out. 30 years. I never saw it coming." And I was like,
Yeah.
and, the snarky younger me looked at, was my first thought was, then why are you helping her move? Yeah. But just the pain and the hurt in his voice and the complete bewilderment
Yeah.
was just traumatizing. So this has turned into a really depressing podcast, and
Well, it's like I'm going to try to put a spin on the positive note come out of that. It's like I think that's having our training and our compassion to help people.
Mhm.
I think that's a space that we can really provide. It's like, yeah, it's not, necessarily. Some people celebrate that divorce, but others don't.
I
But,
understand.
if we can bring in some compassion and some good listening, that's a good thing.
Yeah.
Help them
And
out.
people have options that they don't realize that they have,
Yeah.
at least on the house side. That's what we know.
Mm-hmm.
So,
Big time.
hey, is there anything you want to mention? I'm going to get your website and everything to put down in the show notes so people can get a hold of you. Is there any question they didn't ask you feel like I should have?
No, great job, Ray. Thank you. And I
Oh,
really
thank you.
applaud you as a professional realtor that you've stepped into the space and really know about reverse mortgages. And a profound thank you for having me on. I enjoyed it. It's always good, my friend, to catch up.
Yeah. Hey, thank you very much for taking the time out and coming on. I'm going to
Yeah.
figure out how to turn off this recording, and you have a great day, all right?
Okay. You too, Ray. Take care.
All right. Catch you later, sir.
Okay. Bye-bye.
Okay, just want to thank Jim one more time for coming out. It was really great having him on for my premiere interview. His website and everything will be in the comments down below. And wanted to thank very much for coming out. The Cromford Report is a local service. They provide high-end real estate information for real estate agents and other professionals in the industry. They've been on my radar for a very, very long time. In fact, we used to get that as a subscription through, I think it was through the association, or it was through NMLS or something. And then one year they decided to quit giving us this subscription as part of our fees, which really ticked me off. But First American Title, their marketing department had Tina on, who works for the Cromford Report. She just ran a bunch of numbers and did about an hour presentation about what was going on out there. So the numbers came in, and just the highlights from what I was writing down at the time. Average house on the market is 7 days. All right, we talked last week where you see that average days on market. Your average listing 7 days before it gets an offer accepted on it, which is pretty impressive because you figure 3 or 4 of those days are actively marketing. They put a house on Tuesday or on Thursday, like I said, and then they present all the offers to the seller on Sunday night. That's 4 days right there, and the whole thing is wrapped up within 3 days later. So that's huge, and that tells you what kind of activity we got going on right now. From a bigger upper series standpoint, our demand is 24% higher than we normally are. at this time of the year, and our supply is at 25%. And you're going to see that again when I talk about a couple other numbers here in a bit. But that has created a huge disparity, and which is why the market is so incredibly hot right now. New build permits were actually up 27% last year over the year to year, but it did not have enough of an effect of properties coming in to keep the prices and everything down. And all things considered, this was a little shocking to me. The median family income for Arizona, when you compare that to the price of the median house, is at 60%, which means if you're making medium household income, you can afford 60% of the properties on the MLS right now, right? That still makes this what's considered a very affordable area to live in. For comparison, LA is at 9%, which means you make the median payroll dual family in LA, right? You can only afford 9% of the houses that you'll see on the MLS. So that's part of the reason why people really like coming to Phoenix. She mentioned several times about how many tax and job refugees we're getting, especially from California, that once they allowed people to work from home and said, you're never coming into the office again, you're going to work from home, we're going to shut down this office building, people sat there and went, well, I'll go back and live with mom and dad. All right, well, not with them, but I will at least live, close enough where I can visit them. And they're working from home here now. They're companies in California, but they're working from home here. And to them, these prices are completely okay. So that is why our demand is so up. Our supply is down for two reasons. Mostly it's because the houses are coming off so fast, and two, houses just are not going on the market the way they used to, and that's various reasons. So that was wrap up on this. The numbers from yesterday was 4,546 houses active on the MLS, of which there were 2,247 new listings were put on in the last week. 1,645 of listings closed last week. 1,938 went pending last week. 1,326 went under contract, but they're still accepting backup offers, or UCB. And the other number I wanted to mention here is contract contingent upon buyer sale, that's CCBS, right? And that is the sellers have accepted an offer, but the buyers want a contingency to not have to perform on the contract if they cannot sell their own property, that they have to. All right, and that was only 90. So out of all these contracts that are coming on, all these ones that have been pending in UCB, which is over 3,000, only 90 contracts were accepted if you were trailing along with you that, hey, I want this house, but I have to sell my old house first, all right? And I don't want to get trapped losing my earnest money because I could not get this house sold, all right? And at that point, it could be buyers are not writing that contingency in, and it also could be that sellers are just not accepting those offers requiring that. Right? And if you're in a situation where you are a buyer and you have already been told by a lender, we will not loan you any money to buy a new house until you get rid of your old house first, give us a call. We have a program for that, a partnership with a lender here who will be willing to loan you the money for your second house and help you fix up and sell your first house. All right. So contact information's in the information below. And that's pretty much where we're at right now. Thank you very much for watching. There was a viewer last week who asked a question, and I'm going to paraphrase because I don't have this right off time, but it was like, if I were putting offer on the property, or if I put my house up for sale, do I have to accept the first offer that comes in at the list price that I asked for? And it's like, no, you don't. Right? There's many, many different things that go into a contract besides just the price, and there's many, many different things that the seller might be, which you can write into a contract that will make your lower priced offer more advantageous and more acceptable to the seller. There's a lot of psychology going on. There's a lot of other things going on than just a sales price, right? So thank you very much for that, for sending that question in. If you guys ever have any other questions, put them in the comments below, or you can go to my website that it's also going to be in the comments before, and follow through and click contact me. All right. Thank you very much. You guys have a great week.